Tuesday, November 18th, market analysis, Stan Ehrlich. I start out with stock market indexes, then I go to futures and some stocks. This market's coming down, like I said, topped out approximately October 10th, depending upon your index, which also happened to be a very weird combination of the October lows. But those October lows are the bottom of a small resistance support level, just below the market, and we have now almost touched that. So a break below, and especially a close below the low on October 10th, is going to be a real significant downside bearish breakout. And I expect that to happen maybe yet this week or before Thanksgiving, put it that way. And if that happens, then I'd be looking for a move down probably to around 6,300. Today's a new low for the MES and ES, of course, and a close below previous lows, going back to that bottoming out time frame from October 10th to October 17th, that 1 week. We do have the top of the market containing a bearish engulfing ER sell signal on the exact high day, which is just getting more and more and more profitable longer term. I don't know how much further south this can go, but I will certainly try to help you with bounces and moves in either direction, no matter how long they last or how much of a bullish or bearish move they may have when they happen, and advance of when they happen. So let's look at what have I got here? 15-minute chart to show you the damage done now over approximately almost 2 months from September 24th. Yeah, close to 2 months. So these two yellow lines represent the last two significant lows in 2 months plus. And that would be the October low, October 10th, and then the low looks like on the 17th. Watch out. If it doesn't bounce off of that with good bullish reversals, we're probably going to break it and go a lot lower. Now, I do also want to mention, and I didn't, we are finally oversold. That means at any point we could start to bounce. But the bounce could be rather feeble, not go very far, not last very long, and boom, you're making new lows again, which is exactly what I expect if we start to bounce, which may not be for a day or two or three more after significantly lower levels. This is just the first day that it's oversold. More often than not, it's oversold for a few days and then bounces, not necessarily on the exact low day or the first day it's oversold. And all of the indexes are oversold. That doesn't happen but once or twice a year. Next, MES again, 15-minute chart. Last vestige of support. Finally, we got the spider. New low close below previous lows. Today, relative to the lows that are in the last week or so of October 10th through October 17th. That's the last area of support. And we're heading there fast. You realize just a few days ago, four days ago, we closed at 684 almost, and now we're at 660. 24 points. That's 10 a day on the average. Next. Was that right about that? I think my numbers were off. 20 points. All right. Yeah, it's 5. Yeah, that's 5 points. Sorry. Per day on the average. Spider, 15-minute chart, chewing away at support. Things aren't holding. Rallies are stopping at lower and lower and lower levels. QQQ, oversold. First day since, I don't know what, way back in April. I'm not discounting this. This is important. It could cause the market to turn up, but I don't think so. I think we're going to get more oversold. I think the tops that we have seen are more profound, And this is going to be a switch on the typical seasonal situation, which was October as a bottom, November, December are up. I don't think that's going to happen this year. Well, November's not so far, that's for sure. August. I'm sorry, QQQ. What can I say? Same situation. Some support a little bit lower than today's lows, not too far away. And I think it's going to get broken. MNQ beginning to test already the support levels, which represents the October 10 through 17 lows and other highs and lows going back a month or two earlier. Profound support area, I'm not discounting that, and oversold usually causes me to call for a rally. And I'm saying we could, but it depends on how it does it as to whether I get bullish or not. And I'm not getting bullish. All I'm looking for is a bounce, maybe, and maybe is capitalized, bold font, and underlined. Maybe. NASDAQ, NQ, chewing away at support, already broke for a few minutes. The lows that were made on October 14th and 17th. The last one is the October 10th low. And we're going there. YM, new low closes, starting to hit some significant support. This, I'm sorry to say, is the only one that's not oversold. I thought all of them were, but we didn't quite make it today. Very close. So I'm thinking tomorrow. Another drive down a few hundred points. We're oversold. Next, the 15-minute chart on the YM. Just breaking. Rallies don't go anywhere. Lower highs, lower, and so on over time, and lower lows. Next, Russell. Oversold now for the third day, but it's not quite the same as the other indexes. But it is coming down to the bottom of a support area, and it's about to reach a minimum downside objective that I drew on this chart over a month ago. So that's almost finished. And it was because of a little double top. Not big, it's all very small, but it seems to have worked almost WRKED because we're almost there. All right, 15-minute chart on the Russell. New lows for the longest period of time of the other indexes. Bonds. Right now, it's a rock and a hard spot. Support held Friday of last week, yesterday, Monday, today, Tuesday, bouncing up a little bit. I don't think it's going to rally above resistance, about the upper 117s. And I do think it's going to break below 116.10. That's going to cause it to drop off easily to 15.25, 115.25. And I really think there's a very good chance it could come down to the low 113s. Notes, 10-year notes, little bounce today, same kind of story, some support, bit of resistance above the market. Don't expect much of a rally. Looking for a break, and when it does, it will start a breakout of a double top formation, and that will cause it to have a minimum objective if it works correctly. They don't always work correctly. Down to 110 and a half, 11 and a half. That's my objective. Whether it comes to pass or not, we will know until it happens. Past tense. We'll also be breaking a support level. We'll also be breaking below a bull trend line if we start to make new lows for the last several days in the next day or two. Next, crude oil. Nice rally. Resistance. Trend is down. Not looking for much more strength. Maybe a little bit more. 61 and a half, possibly. Looking for lower levels. Probably a test of 55.80 and maybe lower. Natural gas already stopped in overbought condition at a resistance level last week. Today's a new low since then. Steady close. Neutral RSI. At a support area. It might dribble around in here one way or the other for a bit, but I'm expecting it to come down more likely than not to 3.8 area. Heating oil, surprise, shot through the roof, new highs, kills my long ago, and it worked okay, not great. Bearish engulfing sell signal at the top of the market on June 23rd. It finally bottomed out, and it wasn't all that much lower on October 17th. In oversold conditions, almost at a support level. And now I'm looking at overbought conditions. 77 is not that overbought. 75, remember, is my threshold, not 70. Wells Wilder himself taught me RSI, George Lane stochastics, Bollinger Bands, John, Larry Williams, Williams Percent and so on and so forth. So I'm looking for a turn down, maybe not that big a deal, and heating oil short term. I'm not sure about the longer term. Gold got overbought, topped out, another new low today, a little bit lower close, not coming down to support quite yet. I think we'll get to 39.40 first before we have some sort of bounce. If it doesn't hold at 39.05 area, then we have a big shot down probably to 35.96, a little bit below 36 is what I've been saying for weeks. And that's what I'm looking for. Next, silver. Same kind of story, needs to break below approximately 46.5. That would generate a downside objective, which is starting to dig into some support. I'm looking for 37.07. There's some support that starts around 40. Next, platinum. New low close for a couple of weeks. Starting to chew away at significant lows for a longer period of time. Breaking a little bull trend line over the last month or something. I don't think this is a discernible bearish pattern like head and shoulder. I'm missing the shoulder. Not well enough developed. I can remove that. That worked. All right, so lower. Platinum probably down to ballpark of 1330s. Next, copper. Another new low and close for the last couple of weeks. Breaking below support. Probably going to break this bull trend line. Actually looking for a test at the bottom after the crash, all the way down to something like 4.3. Next is soybeans. And grains, I have been now bullish for a few weeks on an intermediate to long-term basis. So my job now is to try to point out when the beans or the grains in general are going to have minor short-term rally highs on the way up in a longer-term bull market. We're not overbought. We're close. It's been shooting up pretty damn good for a few days. We did have one bearish engulfing on Friday of last week that did not work. Yeah, right away, yesterday. We had a bullish engulfing, killed the previous pattern, got above it, stayed above the high of the bearish engulfing on Friday. It may pop up a little bit more, but I think we're getting close to rolling back down. Yeah, probably back down to 1120, maybe below 1130 a little bit. And we've already reached the first major area of resistance and gotten above it, but didn't stay above it. We closed a little lower on the day. So it could be starting today. Doesn't have to be overbought, but it came close. Shot up in soybean oil. Clearly an upside breakout of a previous bear trend line, which was the top of a downward slanting channel, and a pretty good one at that. So we rallied up, broke out, came down, tested yesterday at a bullish engulfing, shot up again today like I was hoping for, and I said so yesterday. New high close, above all highs for since late September, mid-September, actually. I expect more strength, but not too much. We're close to overbought. Pullback might be back down to 51.60, but after we probably get above 53, and I wouldn't be surprised if we got above 54 first. Meal almost made another new high, closed lower. Doji, inside day, uncertainty, not particularly useful from a technical forecasting standpoint. I like what I see. Still friendly, not overbought. but we are starting to push its way into major historical resistance. This is a little tougher to say. Could easily go up a bit more before it has a correction, but I definitely am bullish for the trend. Next, corn. In a little resistance area, has broken out of a bottom formation, which I don't like because the double shoulder does not have a symmetrical double shoulder on the left. It has a single, but you got shoulders. The last double shoulder is also late by about a month, timing wise. That's the second thing I don't like. But the neckline worked very accurately, and we have made higher highs just last week. And we're starting to move its way back up again after a test of the neckline again yesterday. Looking for new highs above 456 and a quarter, easily pushing 58 3/4. And my minimum upside objective may be on this next drive, if it's strong enough, 483 and a half. But that's where I'm looking to get. We might have a couple of twitches on the way up there, technical corrections. So wheat, short-term new high into resistance again, but not overbought. Slightly higher close, looking good. Optimistic about further rally. My objective is now going to be above 571. Probably, and it's a very broad area, unfortunately, probably above 577, 580s would be okay. That'd be fine. Maybe even getting up to $6. It's a little tough to come up with this one. Apple did have a bearish engulfing ER sell signal today. Watch out. We're going to close that little gap I've been talking about for weeks, and that'll be probably tomorrow. We have another gap lower, which I think is going to get closed at 253 and a half. And I also think we're probably going to come down to 241 and maybe even a bit lower than that. Tesla already broke out to the downside from a double top formation. I should put a little marker in that for that high relative to that high. There you go. There's the double top. We closed below last week, stayed on a closing below breakout levels after trying to close a gap. I think that gap is maybe not going to get closed. I started talking about that yesterday, and today it closed a little lower, $9. That's nothing on a $400 stock. And it was a little bit lower low. I'm looking for a small gap to get closed at 369 and maybe, very possibly, 339. Next. Yeah, that was Tesla. Next, NVIDIA, almost a new low. This is going to be a bit of a breakout, but there's support right underneath it. So I'm definitely looking for a 173.30 and very possibly on the same drive down 164, another $11. We're nowhere near oversold, 33. There's an old gap to close above the market that I am now claiming is what's called a breakaway gap. Remember, there are three types of gaps. Four. A breakaway gap starts a move. An exhaustion gap ends a move. We had both of those. Very rare. Just a few weeks ago. On the way up, exhaustion. Got overbought, stopped. On the way down, breakaway hasn't been closed. This gap got closed. So, common gap and also a midway gap. Midways are extremely rare. Very hard to tell when they happen. So don't count on it being a midway gap. And common gaps just happen in random places. But the key here is gaps are almost always closed. I said that 1,000 times in the last 3 years, at least. AMD tested support, bounced off a little support. The support is definitely not much. Lower close. We have a big gap to close all the way down to 171 or a little under. And that's where I think we're heading. You guys have a great day and profitable trading to you.